Let's step back and look at the Fed under Powell's chairmanship, and that's been a complete disaster. And it started, by the way, with the onset of COVID. We had a huge increase in the fiscal deficit in the United States, and the Fed wasn't passive. They were proactive. They monetized over 90% of that deficit. In other words, the deficit increased. To finance the deficit, the Treasury had to issue bonds and debt. And who bought the bonds? The Fed did. And when the Fed buys bonds, it credits what? The government. It creates money out of thin air. So the money supply exploded as a result of that. In February of 2021, rate of growth year over year in the money supply was at an all-time high. It never reached that level, about a little over 17% per year since the inception of the Fed in 1913. So we had the government fiscal policy expanded, and it was financed in short by the Fed. The Fed monetized it, and the money supply exploded. And what happened? Inflation exploded. And then to counter that explosion in inflation, the Fed now is throwing everything in reverse, and they're contracting the money supply. Since July of 2022, the money supply is actually lower than it was then. Now, and the rate of growth in the money supply is very anemic. It's 2.4% per year on a year-over-year basis. And to hit the Fed's inflation target of 2%, Hanke's golden growth rate suggests that they should be growing the money supply, measured by M2, at about 6% per year. So first, they expanded the money supply because of the fiscal situation, which they didn't have to do. I mean, the Fed is supposedly an independent body making its own policies. No one told them to monetize the debt, but they did it anyway, and the money supply exploded. But remember, with Powell and the Fed, they don't watch the money supply. They claim that the money supply has virtually no connection to asset prices, economic activity, and inflation, which is utter rubbish, of course. So we don't know what they're going to do. But what they did the last time under this hypothetical scenario, the scenario is, by the way, just so people get it straight, that Trump is going to increase the fiscal deficit, and he will do that by tax reductions mainly. And so the deficit will grow. And then the assumption is that if the deficit grows, inflation's going to grow. But that doesn't follow. If the deficit is not monetized by the Fed, the money supply, it doesn't change as a result of the increased fiscal deficit, and inflation is not going to change. I think he's going to do essentially what he did in the first term he was in office. And with new twists and turns, I mean, now we've got this headline of big increases in tariffs, for example. But you have to look back at his view about fiscal side of things. And the fiscal side of things is that he didn't pay too much attention to that in his first term. In other words, controlling the fiscal deficit. Now, of course, Biden even paid less attention to it than Trump. He's just spending. And the only difference really between Biden and Trump and the fiscal side is that Trump would be more leaning towards tax reductions, and that would be the source of expansion in a fiscal deficit, whereas Biden has been more government spending, and that's been the big engine driving increases in the deficits. But they're not deficit hawks, by the way. Trump, first term, or Biden, they paid essentially no attention to the deficits, and the Fed hasn't paid any attention to it too, in the sense that they haven't walked away from it. They've been buying the government paper and expanding the monetary system as a result of that until inflation broke out. And then they reversed gears, and now you've got this, what they call quantitative tightening. They're actually trying to shrink the balance sheet of the Fed. And by doing that, you have very slow growth in the money supply, and inflation is down to 2.4%, and the target's 2. I think next year, with this monetary squeeze that continues, we'll be below 2% with inflation in 2025. We'll see inflation readings below 2% per year next year. That's what my thinking is. And that's kind of baked in the cake because remember, inflation lags behind changes in the money supply. So if the money supply has been slowing down and contracting since early 2022, it's driving this downward movement in the inflation rate. How do you stop a runaway train, the deficit and debt, the mountain of debt? And there are only 4 ways to do this. One is that you can cut government spending. That would be the Elon Musk kind of thing. If Musk was appointed and had some commission to get improved government efficiency, cut down government expenditures, waste, fraud, and abuse, that would cut the government expenditures. So that's one solution. The other solution is to increase taxes. And Trump has already indicated he doesn't want to increase taxes. He actually wants the tax cuts that he put in extended. So that doesn't look very viable. So what's left? You've got 3. There's something called the inflation tax. That, of course, bothers all central bankers because if government spending is not cut and if taxes aren't raised, where does that leave you? It leaves you with only one thing to do: monetize the debt and increase the inflation tax, and that's how you finance it. Now, the 4th way is my preferred approach, and that's what I indicated. You change the Constitution. And I'm on the board of something called the Federal Fiscal Sustainability Foundation, and that's what we're pushing for. A convention of states under Article 5, change the Constitution, put in a constitutional amendment like they did in Switzerland in 2001 that limits the rate of growth in the government expenditures to the rate of growth in the overall economy. So that right away, by definition, the government can't squeeze out the private sector. The relative share and size of the government stays the same over time. It doesn't grow. It doesn't push out the private sector. I think the economy will slow down. And the reason is based on a model. And what's the model? The model is a quantity theory of money. And that's the most reliable way to predict the course of national income. And when I say national income, I mean nominal GDP, the real component plus the inflation component. That's the most reliable thing to look at. And what's been happening since early 2022, the money supply has been contracting. The stock of the money supply now is lower than it was in July of 2022. And when that happens, it's only happened, by the way, 4 times historically since the Fed was founded in 1913. And in every one of those cases, we had a recession, or in one of the cases of a contraction, 1929 to 1933. You know what happened then? We had a huge contraction in the money supply, and we had a Great Depression. The other 3 episodes were more in line with what we've had now, just a contraction, a relatively mild contraction, and that always led in those other 3 cases to recessions. And so that's why I think we're in for a slowdown. But people don't look, they don't have a model, they don't have a way to think about national income determination. That's the problem. Everyone has become data dependent. What do? You look at your iPhone every hour to see what in the world's happening on Wall Street, what data are being released by the government, and basically have your finger in the wind and say, oh, the market's going to go up, market's going to go down, the economy's going up, going down. And it changes every day, every hour, depending on the data that are coming through. But there's no coherent modeling of anything. You have no theory, basically, of what drives the economy. And the only thing that fuels the economy is money. Most people should understand this, by the way. It doesn't take a rocket scientist to figure out that if you increase the money supply a lot, what happens? First, asset prices go up. That happened in the pandemic. Real estate prices, land prices, stock prices, all those things went booming up, even though the economy was locked down and we had COVID, all kinds of other problems. And now, of course, the Fed never predicted that we were going to have a boom in asset prices, that we were going to have more inflation, because they were never looking at the money supply, because they don't use the quantity theory of money. They've deep-sixed it. The Middle Eastern war is controlled by the Israel lobby in the United States. So he'll have no control over that at all. So you can forget that one. Netanyahu's going to do what Netanyahu wants to do. That's the end of that story. Now, going to Ukraine, he might, in fact, have some influence there. But the fact is, the Russians have already won that conflict, and whether the United States will go along with the conditions to establish a peace that the Russians want is another story, because the main condition is that Ukraine could not be a part of NATO. They would be a neutral country. That's one thing. The other thing is that the regions in Donbass that Russia has already conquered will go to Russia. So that's another factor. So you put that in your pipe and smoke it, because those are hardcore conditions of the Russians. The Russians will not stop until those conditions are met. So we'll see what Trump does with that. The Russians have won the war, so they're going to be calling the tune. Usually what happens when somebody wins a war, the winner calls the tune. So what you're throwing Trump into, what's that have to do with it? The winners run the show. The only thing that Trump will be involved with will be, he has indicated that he's getting tired of funding NATO and that he does want to stop the war and get a prize for doing that. But in the meantime, the Russians are clobbering the Ukrainians and NATO. You can see that even Biden has promised to continue to pump money into that war and finance it until the new president arrives in the White House. He's pumping as much as he possibly can into that war right now, Biden is. It just fuels the war. It basically fuels the destruction of Ukraine. This is the way you have to think about it. The longer this thing goes on, the worse off Ukraine is going to be at the end of the day. I don't think that's the objective of Biden. But again, you have to look at reality. You ask about the limousine liberals, you say, well, their objective isn't to make billionaires richer than everybody else and the elites richer than everybody else and people who own a lot of assets richer than everybody else. That's not what the limousine liberals and the left say they want to do. But that's what they do. Now we're looking at Ukraine. And obviously, the president isn't coming out with a speech. I'm going to send a few more billion to Ukraine so it can be torn up and we have even more Ukrainian casualties in this war and that they lose more territory. That's the reality of what's happening. I think you have to go back to 2008, and you have to have historical context. Who started the war? The U.S. and the West did by opening the door for Ukraine to become a member of NATO, which was a massive red line for the Russians. And Putin had made this very clear. So you don't start a discussion of talking in real time as of today. You have to look at the context of the thing. What was the first chapter, the second chapter, third chapter? What was going on here?